FY22 revenue guidance of 10,000 crore rupees. Karnataka government said that people above the age of 60 must wear masks in public places. Now, this warning comes after a growing scare of COVID-19 subvariant in Kerala. Tensions in the Red Sea continue. More companies that depend on maritime trade are asking their container ships to avoid the Suez Canal route. Sony says that it has not yet agreed to Zee's proposal. It added that it is looking forward to hearing the Zee's side on this. Let's take a quick look at how the markets fared. Let's have a couple of charts pulled for our viewers on the screen. Now, markets end with marginal gains after a day of flat trade. Nifty ends above 21,400 after a day of swing. If you look at the Sensex as well, and let's have the Sensex chart on the screen as well, Sensex ended above 71,400. Nifty Bank, if one were to look at it, underperformed the benchmarks to end flat. If one were to look at the 5 constituents on the Nifty Bank index, they all ended in the red, whereas SBI ended with a gain of over 1%. Now, largely it was a sea of red across most sectoral indices. IT, auto, financial services, media metals were in the red. Nifty IT, however, was the top sectoral loser. From the gainer side, we had the FMCG index, which was packed most with the gains. It ended higher by 1.4%, and it was followed by the PSU banks, pharma, consumers, oil and gas. From the broader markets, mid-cap index ended in the red, whereas the small caps marginally outperformed to end the day in the green. Moving on, as we delve deep into the headlines, we have an NDTV Profit exclusive for our viewers right here. Now sources tell my colleague Rishabh Bhatnagar that the troubled edtech firm Byos is set to miss its 10,000 crore revenue target for FY22. Rish, my colleague is joining us right now live from there. You have gathered and spoken to our sources. So is it really true that Byos may miss its FY22 target?
Thanks, Pragatti, for that. Well, yes, we have got our hands on Byjus's consolidated earnings. The company has so far stayed mum on it. They only released a standalone earnings report last month. What we're seeing is that there is a large miss on the revenue guidance, like you mentioned. When Byjus had released its FY21 numbers, it had said it is deferring a lot of revenues to the next year. And which is why the FY22 consolidated revenue, as per its internal projections, was supposed to be at around 10,000 crores. But what we are seeing is that they have posted a revenue from operations of just over 5,000 crore. That number is also about 100% growth year on year, but it is still a large miss on the guidance front. Byjus's losses have also climbed during this period. They've nearly doubled to about 8,245 crore rupees. And in FY21, they posted about 4,500 crore in losses. So a poor set of numbers again for Byjus this year, as they continue to face a lot of legal headwinds, financial headwinds. There's a working capital crunch, plenty of battles going on in several different courts.
Well, thanks so much for those details. Byjus is definitely a troubled firm that we'll keep a close watch on. For our viewers, we have a breaking update coming in from the Reserve Bank of India. Now, RBI has tightened the norms for lenders investing in alternative investment funds. We have a colleague and the banking editor, Vishwanath Nair, joining us. Vishy, it's the latest update that the RBI has just released a circular on this. Could you please help us understand what the guidelines are saying?
Right, Pragati. So what the RBI has essentially said is that this is to avoid any kind of evergreening that may be happening within the lending sector. So essentially, if there is a lender, a regulated entity of the Reserve Bank of India, which is investing in AIFs, then they must make sure that this AIF does not have any kind of direct or indirect investment into a debtor company. Now, debtor company by RBI's definition is any kind of company where this lender has had any lending arrangements in the past 12 months or even currently. So that qualifies as a debtor company. So essentially, the AIF should not have any kind of relationship with this debtor company. What the rules also say is that If the lender finds out that the AIF has made any kind of investment in such debtor companies, they have about 30 days to liquidate their investments. If they are not able to liquidate their investments within this 30-day period, then the lender has to make 100% provisioning under their exposure, against their exposure to this AIF. So this is clearly a move towards tightening lending arrangements with AIFs. AIFs, alternative investment funds, of course, go out and invest in a lot of companies out there in the world, and essentially they borrow money or they raise money from various investors, including regulated entities of the RBI. That's what the update right now is, Pragati. Of course, we'll keep our viewers updated on future developments.
All right. Thanks so much, Vishy, for bringing that breaking update from the RBI. Moving on, Ultr Tech had earlier challenged the CCI order that added Builders Association of India in the ongoing proceedings against cartelization. Now, the Delhi High Court has declined the writ petition filed by Ultr Tech during the day. Charu Singh, my colleague, joins us to tell us more on the plea. Charu, what are you picking up from the Delhi High Court?
Hi, Pragati. So the scene is in the year 2019. The Competition Commission of India started getting a lot of complaints or tips about cartelization happening in among grey cement manufacturers. So they started investigating it, and the investigation is still ongoing. And while it was going on, the Builder Association of India went ahead with an impediment application, which is basically an application to ask the authorities to include them in the proceedings. When that happened, when that was allowed, Ultr Tech went to Delhi High Court and said that this cannot be allowed by the CCI because this would give BAI, which is the Builder Association of India, the direct access to some confidential information and documents about the grey cement manufacturer, that is Ultr Tech. They said that it is against the principle of natural justice. So Delhi High Court started hearing the matter and made some observation and heard all the allegations from both the parties, that is the CCI as well as Ultr Tech, and came to the conclusion that principles of natural justice are not absolute. They depend from case to case. The facts can differ. And in these cases, in such cases where an investigation about cartelization is taking place, it is all right for Builder Association of India, which is an important party for grey cement manufacturers, to be pleaded, to be included. Also, see, this at the end of the day affects trade, practice, manufacturing, selling, and every other aspect of grey cement. So that is why it is very important for Builder Association of India to also be in the know of the matter. So the investigation with the CCI is still going on. BAI will continue to be a party to the investigation, will also be a party to the case that is going on, and we'll keep you updated on what happens next.
All right, Charu, thanks so much for bringing us those details. We'll keep a close watch on this and come back to you once you have more updates. Let's slip into a short break right now. We have another NDTV Profit exclusive lined up for you on the other side. Keep watching. We'll be right back. Welcome back. You're watching The Reporter on NDTV Profit. Now, before going on the break, we had already promised our viewers that we have another exclusive lined up. So here's this one for you. My colleague Janani has learned from sources that the Commerce Ministry is working on a new scheme for the manufacturing of very efficient ACs. Janani, she's joining us live right now. Janani, what have you gathered so far from your sources on this exclusive?
Hi, Pragatti. Like you said, the Commerce Ministry is working on a draft project report for the manufacture of super efficient air conditioners in the country. Now, it's at the stage where it is seeking multilateral partners. And the idea here is to provide viability gap funding, some R&D, some capacity building support for what must be another niche, another iteration of efficient air conditioning. Now, this becomes particularly important considering, higher temperatures that we're facing in the, recent past. But also as an industry, the air conditioning industry is set for a boom, and World Bank estimates that this is a 1.6 trillion investment opportunity that is there for the industry, and India wants to capitalize on this. So as you remember, there's also PLI on this very particular niche. And, as of last year, we had 26 applicants and they had committed close to 4,000 crores of committed investment. Now, some of these were famous names, including, Daikin, Hitachi, Panasonic, Voltas, Blue Star, Matube, Dixon, Havells, all of these very famous names. It's very likely that they will be interested in this new kind of scheme also. But the Commerce Ministry is still in the early stages of preparing this draft and seeking more participation. But as we're coming to learn, it would be something that would gather a lot of industry interest, and the ministry has already started consultation workshops to get a better sense of how to pitch this further. That's all we're hearing now, but we'll stay tuned to this update and bring more as we get to know.
Thanks so much, Janani. We'll keep coming back to you with those more exclusives and what the government is working on. Let's take a look at another story that we have. Now, hotel operators are confronting a challenge that threatens to steer the diners away to standalone restaurants. And this challenge is nothing but an uneven GST structure. Sessa, who tracks the space closely, joins us. Sessa, over to you.
There is a disparity in GST rates, and it has been a bone of contention for a long time now. But the matter is becoming more serious, with hoteliers losing out on the potential revenue opportunities, as well as seeing their market share taking a hit, with the growing tendency of consumers to order from, Zomato or Swiggy during their stay. So while restaurants inside hotels that attract 18% GST are allowed to claim input tax credit, the industry argues that the mere perception of a higher tax at a restaurant within the hotel discourages customers to to look for alternative options. So even if the prices on the menu are lower compared to the standalone restaurants. Now, a basic back of the envelope calculation shows that, for instance, if the customer dining at a standalone restaurant pays say, for example, rupees 100 in GST for a rupees 2,000 rupee meal, the same meal at a hotel restaurant would attract a staggering 360 rupees in taxes. Now, while this difference won't really matter much for consumers staying in luxury hotels, it is the mid-market hotels, where consumers are more price sensitive, and this market is facing a demand issue. And, factors such as ambience, luxury, quality of service is often overlooked by guests focused on budgetary constraints. Now, this is according to the mid-market players that NDTV Profit has reached out to. The industry is questioning why a hotel room should have any significance with dining options. And the consensus is clear. That restaurants inside hotels are patronized by walk-in guests too, and not just by the in-house residential guests. So they should have the freedom to compete on an equal footing with standalone restaurants.
Well, that was my colleague on the uneven GST structure. Let's take a look at the holiday season now. As we approach this season, the leisure destinations are naturally in focus. People are now planning their travel, and as they plan more travel, the airfares are also surging. Vinay Kulbe is joining us with the latest airfare data with us. Vinay, what are the current fares looking like for travel?
The year 2023 is coming to an end. But what is not ending is the people's hunger to travel in order to celebrate Christmas and New Year. And if you are one of those people who haven't booked your flight tickets yet and you're planning to, let me tell you what is going to cost you. So Goa, Kochi, Puducherry and Bagdogra has come up as the most popular destinations according to Make My Trip when it comes to travel around Christmas and New Year. So if you're going to book from Delhi to Goa on Friday, it is going to cost you 11,500. Mind you, the Christmas is on Monday, and as it comes closer to Christmas, the prices are going to lower down. The same trend will be observed towards the New Year's Eve. What is coming as interesting here is that Goa is not seeming to be as popular as a destination towards the end of the year as it used to be earlier. So Kochi and Puducherry are commanding higher prices from Delhi, and this shows that the demand is higher than what the airlines were expecting earlier. When it comes to international destinations, Bangkok, Singapore, Dubai and Bali has been come out as the most popular destinations on international travel, and they are commanding higher prices. So if you look at the Delhi to Dubai sector, 23,000 or around 24,000 is the ticket price that you have to pay on Friday. And as it comes closer to Christmas or New Year, the prices are going to lower down as the days are far ahead from the date of booking. These prices are as on December 18th and are sourced from Skyscanner. And what is also important here, that the prices might seem a bit expensive, but I think it is going to be worth the price you pay.
Well, the holiday season is definitely not going to be that affordable or cheap for our viewers. Let's take a look at another NDTV Profit news break confirmed. SpiceJet has expressed interest for a cash-strapped Go First Airlines. Now, NDTV Profit reported yesterday that Go First had found 2 new bidders just before it was set to undergo liquidation. Africa-based Safric and another firm called Sky One have expressed their interest in Go First. Now, it's definitely raining exclusives from our side for our viewers. Now, before we move on, let's take a quick break. We'll be right back with more news and updates. Welcome back. You're watching The Reporter on NDTV Profit. Apart from exclusives, we have another breaking news update coming in. The Lok Sabha has passed the second amendment to the Central Goods and Services Tax Bill. My colleague Janani is standing by. Janani, what is this bill exactly about? Because we are gathering that it has just been passed.
That's right. So as we're getting to hear, two finance bills have been passed in the lower house of the Lok Sabha. One of this is the Central Goods and Services Tax Amendment Bill. What does this allow for? Well, back in August, the GST Council had approved that the age limit extension for the President and the member of the GST Appellate Tribunal would be extended. Now, this was extended from 67 to 70 years of age for the President and from 65 to 67 years for the member. So these are some important highlights that came about, in the last GST Council meeting. And now by passing the bill, it is instituted into the Act and is formalized. Another bill that was passed was, of course, the legislation bill for, the provisional collection of taxes bill. Now, this was also introduced in the Parliament last week and provides for the interim, imposition or the increase of customs duty or excise duty.
All right, Janani.
In February 1st, but will of course come into effect only from April 1st. For this interim period, this would be something that would come into effect.
All right, Janani, thanks so much. We'll come back to you with more details on this. Before we wrap up, everyone has to wear clothes. It is perhaps the most basic act of daily living, but we never consider how scary it can be for those with special abilities. Now, buttoning shirts can be a challenge, tight fits won't accommodate diapers, and regular placement of pockets don't work for those in wheelchairs. So the question is, how can fashion be more inclusive? As a part of the Samarth initiative by Hyundai, we take a look at what adaptive clothing is all about.
This action may look simple, but it alone can become a daily reminder of inaccessibility for people who have disabilities. Soumita Basu is keenly aware of the significance of accessible or adaptive clothing for people with disabilities. She was struck by psoriatic arthritis, which affected her body muscles from the age of 28. This condition made the simple act of sliding clothes on and off quite challenging for her. And that is how Zenica Inclusive Fashion was born.
You can see this something like a yellow top behind me. The yellow top is something that, a caregiver can help a person wear without having to move any part of her hands or anything. She can just sit and it just opens up and the caregiver just, wraps it around. That's as simple as that. We have show buttons, we hide velcros under it or magnets under it. So, it just opens and closes like that. So we have, as I said, the zips are there. With just one finger, you can take it up and down. Flap openings, where men, particularly elderly men, I make sure my pockets are at such a place that you can access them while you're sitting or standing. The whole mantra of my brand is that your clothes are meant to fit you. You're not meant to fit your clothes.
While Soumita's and her mother Amita's work is often showcased in exhibitions like this one,
this is the website of Ekansh Trust.
Anita Iyer Narayan's collected designs are available online. Anita is a disability rights advocate and the founder of the NGO Ekansh Trust. Her unique online catalogue features 15 designs of functional adaptive clothing chosen from a pool of 52 submissions by fashion design students from across the country.
These are very, very simple solutions. So and also if a caregiver is taking care of you, so can we have the buttons at the back so that, you don't feel very embarrassed about somebody dressing you up. So the zipper could be to the side so that everybody's dignity is respected, if I can put it that way. So that is what our catalogue basically intends to do, to just give the choice back to the person with a disability and the caregiver, and they can have it tailored anywhere.
Designer Anju Modi doesn't have a clothing line for people with disabilities. Instead, she works with each client individually to create clothes meant only for them. And every year, she and some of India's other top designers participate in this fashion show, organized by the Fashion Design Council of India in collaboration with the Tamanna School. Its purpose is to raise awareness around a more inclusive approach to fashion.
I've been involved with Tamanna since last 7-8 years. Every year we present a collection, and then every year we are associated with one special child and we make clothing for that person. These kind of initiatives should be more often be brought into limelight so that more people get involved.
Clothing is a powerful tool in defining who you are as a person. Clothes should bring comfort, confidence and also dignity, not be yet another barrier to accessibility.